Everyone, and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, as you can see, while it has been quite a busy day in terms of economic data, it has all been congested into around 1 hour of trading. We do have some more economic data to come still today in terms of manufacturing PMI, US new home sales, consumer confidence from Euro, and API weekly crude oil stocks, which are a key focal point at the moment. I think oil markets have been a key focal point really for the markets for the last few weeks, especially during the quieter periods, maybe for FX and equity markets. So I think this is something which is worth paying close attention to, especially ahead of the official EIA release tomorrow. Now the markets themselves are actually trading a little bit lower today. The oil markets, they're down around 1% ahead of this release, really coming off those highs. We did see Brent crude trade through those $50 a barrel levels. That's now trading back just above $49 a barrel currently, so there is clearly a strong resistance zone up there. Importantly, it didn't break above the previous highs on this occasion, which maybe suggests that it is running into some stern resistance here. Elsewhere in the markets, we're seeing European equity markets trading a little bit higher again today, potentially being helped along by those PMI data. I think there was two key points to the data really, and German and French data really were quite different, even though ultimately they both pointed to resilience after the Brexit vote. And that is the thing that people have really taken away from this, is that the 2 or 3 months following the Brexit vote, the Eurozone economy is showing more resilience than had potentially been factored in. We saw a similar reaction to the UK data last week. Overall, the results were relatively mixed, I'd say. In terms of the German economy, we did see a slowdown in growth in the services sector. The French economy, we actually saw a pickup in growth in the services sector. It looks like the services sector is actually going to drive the country away from stagnation, which it experienced in the second quarter, to record potentially some decent levels of growth for the third quarter, which is certainly a positive in terms of employment, which has been a positive for both Germany and France, and the Eurozone as a whole really in recent months. We did see new employment growth actually falling slightly. We did still see growth, but the actual pace of growth was stalling, which potentially suggests that these businesses are not quite as optimistic as they were a few months ago. Another important point which I took away from it really was the services sector outlook for both Germany and France. Was a little bit pessimistic, or a little bit more. The optimism was at least shrinking, which again suggests that while the near-term impact of Brexit has been avoided, any negative impact that is, businesses still appear to be a little bit cautious when it comes to the longer-term impact, and that suggests to me that may filter through into some form of slowdown further down the road. But at the moment, markets are just focused on the overall figures. People are focused on the fact that the economy has shown resilience in the near term to the Brexit vote. So I think that is a positive. That's really helping to drive European stocks higher today. It's also helping, it would appear, to support the euro as well. Elsewhere in the currency space, we've just seen some movements in the New Zealand dollar off the back of Governor Wheeler releasing a note on the website overnight saying that I think it's around 35 basis points which have already been effectively alluded to in terms of future rate cuts. They don't expect to go beyond that at this moment in time, which is a bit of a hawkish remark from the governor compared to what people were potentially anticipating. So we have seen a New Zealand dollar rally so far today. This is something which Dean touched on in his piece today, which I'll mention towards the end. We've got some, again, great content on the OANDA MarketPulse site. Aside from the manufacturing and services PMIs today from the Euro area, we have had the manufacturing PMI from Japan as well. That slightly beat expectations and rose up to 49.6, still in contraction territory, but it would suggest that potentially the Japanese manufacturers are to an extent weathering the storm of the stronger yen at this moment in time. Of course, it is still in contraction, so they are still feeling the impacts, but maybe weathering it a little better than people previously thought. They may have to weather it a bit longer though, because the markets don't seem confident that we're going to see any weakness in the yen. They don't seem confident in the Bank of Japan's ability to provide sufficient monetary stimulus in order to do so, and they're clearly not anticipating any form of currency intervention from the Japanese finance ministry either. So maybe it's going to continue to be a rough ride for the Japanese manufacturers, but at the moment they are showing a little bit of resilience, even though they are in contraction territory. Like I say, for the rest of the day, US data, Euro data, and of course those crude oil stocks still to come. As always, for more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. We do have some great articles on there once again. As I mentioned, Dean's piece talking about the 5 key events today, touching on things like the Euro data. Once again, he also touches on the movements in the New Zealand dollar, among other things. So I think that's a really interesting read. We've also got some great pieces from Kenny talking about the reaction in the currency markets to the data we've had so far, and in anticipation of some US events later on in the week. And you've also got my piece at the bottom there from earlier on this morning. We've also got great commentary as well all the time from OANDA, the week ahead, for example, as well as many other commentary as well coming from the Asia Pacific region as well. We've got Stephen who puts a few posts on a week, again great reads, and also our new analyst Jeff as well. I think seriously you recommend checking these articles out. To find out more about OANDA, you can also check out the OANDA website, that's oanda.com, and also check out OANDA Forex Labs for some great tools which have all been designed to help you with your trading.